All right, here's the next day we're going to study, November 16th, the high and low of that day and of the previous day, right here. We're going to study how to use the breaker block and the fair value gap strategy on with the ICT on this day using the high and low of the previous day, which would have been November 15th. You can see this white line marks out the low of the previous day, and you can see this day went below that, but came back up, closed strong green, and moved upwards. How can we use the breaker block strategies with the fair value gaps and the low of the previous day together to find relatively high probability trades? Okay, so that's what I'm trying to do here with this. So let's back out a little bit. Let's go to the 5-minute chart. I'm only using the 5-minute and the 1-minute chart. So here's the 5-minute chart. You can see the 5-minute chart here. We're going to take a look at all this. It's going to explain it. And then the 1-minute charts right here. All right. I like to use them both because sometimes you can't see things on the 5-minute that you can on the 1-minute. And when you get them to agree with one another, then you have a higher probability that there's something there, right? So what are we looking for? We're looking for breaker blocks. Now, I would not have been able to get this one. Study what a breaker block is. It's a zigzag pattern where it puts in a lower low and it breaks above. When it breaks above, now this is a bull one, of course. This is for bullish. So what I'm either looking for something to develop to show me to go short under the previous day. If it would have continued down, I would want to see breaker blocks developing and pushing down. We don't have any breaker blocks developing here and pushing down. We do have two pushing up. This one created a fair value gap. If you don't know what that is, please study that in order to follow this strategy. It's very important. It's really simple. There's a gap between the third and the first candle, leaving an empty space in the middle where this candle is. There's no wicks touching this area. There's no wick from the top coming in. There's no wick from the bottom coming in. From both sides of the candles, on both sides of this one candle, it leaves an empty space. Okay? Like right here. There's a candle to the top, there's a candle to the bottom, and there's this one in the middle that does not have any wicks coming into it. That's an empty space. Okay, anyway, fair value gaps are important. Reversal areas, support areas, and that's what we use with this strategy. First we need a breaker block. Study what that is. Make sure you understand what that is. Zigzag pattern that pushes lower and then breaks above, creating a fair value gap. This is the ideal textbook pattern that we're talking about here for a bull move. It goes down, comes up, goes down further, comes up further. So the down move is further than the previous one, and the up move is further than the previous one, and you're hoping that it creates a fair value gap. Now, this is too early. I probably would have come in to work, I probably would have came in just as this had passed. I might have been tempted to take this, and if I did, this one would have failed. But I can't see how I would have gotten anything on this one, even though it's really, really good. Okay, but the morning's opening up here at 9:30. So taking a trade before 9:30 can be tricky. It could have easily went in my favor, and it did go in the right direction for it, but it just spiked down right here, right? So if it wasn't for that, I would have entered on this green candle right here coming back into the fair value gap. I would have entered in for a long right here, and I would have hoped for this kind of move right away. Unfortunately, I probably would have been stopped out. I don't think I would have put my stop at the bottom of the pivot. Usually I like to put it down here underneath that first candle, creating the fair value gap, and it would have just stopped me out. You can't avoid that. Can't be stopped. It's going to happen. Good trades are going to whip you out, and that's just life. Okay, we have to accept that. So we're looking for another fair value gap here on the 5-minute chart. Yep, 5-minute chart. And this one right here failed because price had just slammed right down in past it, right? And so there's really, I'm really looking for developments either near or under or near the previous low of day. Remember, we're trying to figure out which way price is going to go on this day. Is it going to continue down past the low of yesterday, or is it going to bounce and go up? And so we're looking for patterns like this. This says it's going to bounce and go up, right? Of course, it failed, created another breaker block pattern with a fair value gap underneath, pointing up. Here's the fair value gap. space between the third and first candle, leaving that middle one empty of wicks. Price came all the way down here and tested. This would have been an ideal and best entry right here. Stop underneath the fair value gap candle, and that would have been a very nice run to the upside on that particular one. Yeah, you might say, well, here's another one up here. This candle had a fair value gap too. Exactly, and that one might have been worth a try. I think when these kinds of things happen, I would not have been stopped out on it if I got in on this candle here. If I got in on this candle right here, let's say I got in on this candle. My stop is underneath here. Let's see which one. My stop is underneath the fair value gap candle, right? And it didn't even come to one to the top, right? So this would have been either a loss, or a lot of times what I'll do is I'll move my stop up to break even as soon as I can. And when I see this choppy behavior, and I could have broke even on this if I took this trade. Just being realistic about it. I don't want to say, oh, this was a, because right here is where the stop would have been. However, this dip down here using this fair value gap in a discount range, which is lower, right? When price moves up this high, you're looking for the medium area. And, like I said, this would have not been too bad, actually, and it might have worked, break even or even loss. But this one does really well. It dips down into the bottom third of this big move. And this is always going to be the best area. When it gets down into discount, past 50% low, past and below 50% of the move, into the 60% area, then that's always going to be your best move. It doesn't always do that. It could have just as easily bounced on this one and went up. Right? This is a very choppy day. This is one of the most difficult days when you get a choppy day like this. These are the hard days to trade. Let's look at the 1 minute. This is early morning. I probably would have missed this unless I was waiting for news at 8:30. Here's 8:30. And as soon as the news happened, it spiked up, came down. It did create a fair value gap. And here's the pintails for that entry. If we could zoom in there a little bit more, you can see what I'm saying. Let's look a little closer here. See, the space is empty. There's no wicks coming into this except for this one that comes down, and that's the entry point. You enter in on something like that, and you have a nice stop loss. So on the 1 minute chart, you see there's a pretty decent entry. On the 5 minute chart, you don't really have that same opportunity, right? So like I said, I might have not even been, sometimes I will trade the news, but a lot of times I'll just wait until the bell opens up. Bell doesn't open up until right here. It comes back down into this fair value gap. And like I said, I might have tried to get in right here on those with my stop down here. And like I said, this just inevitably, at some point, you're eventually going to have losses. And that's just part of the game, right? It's just the way it is. So this could still end up being a loss on this particular trade. Here's a fair value gap, but and if you believe that it is bullish off this low of day, off this yesterday's low, and you're thinking, you're looking for fair value gaps off this displacement move here. Now this is let's see if we can chop around and see what's going on here. You got a low, a high, a lower low, and it doesn't displace until, way up here, where you're actually getting, and something that you could say this is definitely out of the context here, and this is the only fair value gap you have out of all these candles. Wait a minute, there's one right here, and technically it did come down and test that and had a nice move up. So there's some opportunities as we get better and better at this. I'm not sure if I'd have taken this one way up here. I probably would have, if I had in real time, if I was sure that it was going to take out that high right there, if I was positive, and my stop loss literally is just this tiny little stop loss right here, because that's where the fair value gap candle ends, get in on this wick, I might have taken that trade. I can't say for sure. It depends on the heat of the moment, depends on how I'm feeling about taking out these highs. Depends on, what I'm really assessing in my mind at the moment. And it's also possible that I would have taken this trade because it might have stopped me out on that candle. I may have waited for it to, it depends on how fast, It's easy to look at these things after the fact. In real time, we don't know how fast these candles develop. you know, and that makes a big difference sometimes. I mean, if this candle came straight down and shot down too quick for me to think about entering into this tiny little fair value, and then it closed green, I may have not even tried to get in on this thing if I were to take it until way up here, using the bottom of this as my stop loss. And, you know, that's obviously a good risk reward. All right. So it's easy to examine these after the fact. Very difficult to really say what you would have done in the heat of the moment. So I don't want to say, you know, oh, I know what I'm doing here, because, you know, things are different when you do it in real time. Now let's take a look at this area over here. Now here's a breaker block with a fair value gap area. Let's go back to the 5 minute. Here we see it more clearly, the gap and the test. And this was probably the best trade. This one would have stopped us out for a loss. This one would have been a pretty good move. All right. On the 1 minute, we don't really have it pull back to what we would call the fair value gap of the 1 minute chart, because you don't have that same non-disturbed candle formations that you do on the 5. So the test that came in on the 5 minute chart was including these blocks here. Well, we can't include those on the 1 minute because there's interruption with candle wicks. So that's why it's good to use both. And depending on what you're really feeling about the breaker blocks, and really understanding about price movement here. All right, there it is. Boom, displacement. And there's the fair value gap that was created. It never came down on the 1 minute, but using that same area on the 5 minute, it did. All right, so that's why I like to use both. And depending on how I'm really feeling, and do I really think it's going to come back up here and take out these highs? Do I really believe that? Is it really bouncing off of yesterday's low in a way, consolidating and pushing in a way that I really trust, right? And if it never comes down here, I get an opportunity. Here's a couple small fair value gaps, and you can see that price did. Let's go in closer here and take a look at this. Really, you can see how price tested each one of them. Really did. Tested both of them. And with the right stop loss, with the right entry, with the right precision, you can see that those did pretty good. Those actually do work pretty well. Now, if you're seeing fair value gaps that I haven't had a chance to notice, like I just saw one here, right there, that would have been a good opportunity. But the point of these, some of these are too high. Look how high this one is on the move towards the, it's only got it already swiped the top of this. It already swiped the top of that. So I'm thinking it's going to be going down to take out some lows, some stops down here, and it does. I'm not interested in this one, even though it's a nice one, even though it might have worked, even though there's some profit, 1-to-1, break even, whatever. It didn't come down like these did here, this one especially, on the 5 minute anyway. So this is how we're looking at these breaker blocks, fair value gaps, and the high and lows of the previous days. And our thinking, our logic, our rational processes that we're using. And truthfully, they don't always work. And risk management is a key. We have to always have good stop losses and stick to that. Stop moving that around. Make sure you get out when you're supposed to get out. But this is in my other studies on this technique, it is really, really worth pursuing in terms of profitability, because I want to show the bad days with the good days. This is a day that could have just simply been a lost day. It really could have. If I got hit over here and on the 5 minute and didn't take the 1 minute here, if I didn't get in early enough, if I would have tried this one here just because I believed that it was going to go to the high and just jumped in it, that would have worked. But there's some places that could have hurt. If I would have tried it back here and waited and missed this one and tried it again here, this could have stopped me out for a full loss. This one could have been timed wrong as well. These over here, they did okay, but I could have timed it wrong, and so you don't always time it the right way. So anyway, this is 11/16/2023, and let's go to the next day of our study and continue to chop through these days one by one. I'm looking at all of these days here on the daily chart, and I'm going to go through these days in particular because they're the most choppy, sideways kind of days that are on this month. I'm going to go through every single one of these days right here And I'm going to use the same strategy, high, low of previous day, looking for breaker blocks and fair value gaps to see if in the most sideways and choppy market, there's anything to this strategy. Because if you can pull something profitable out of this kind of market, this sideways, choppy, indecisive market, which is the hardest markets to trade, by the way, if we can learn how to master this particular strategy in this kind of market, I have a feeling it's going to do really good on markets that are a lot less choppy. So, all right, we'll see you in the next video. Peace.